Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might seem a little dry at first, but let's just say if you like finding little financial treasures hidden in plain sight, you are in for a treat because this company might be selling more than just a good time. Before we jump in, if you appreciate cutting through the corporate jargon to get to the real story, make sure you are subscribed. We also have a Discord community linked in the description where we break down these filings even further and share insights. So come join the conversation. Alright, let's get into it. We're looking at a Form 8K filing from NextTrip Incorporated. This report tells us about some pretty important events that happened recently. Think of it as a company's way of telling the world, hey, something significant just went down. And in this case, it looks like they've been busy making deals. The company NextTrip Incorporated, which is based in Nevada, has just announced a deal that brought in some much needed cash. They sold some of their stock and also gave out warrants, which are like options to buy more stock later. This happened on the 21st of November, 2025. Now, you might be wondering why this is a big deal. Well, companies have to file these reports to make sure everyone is kept in the loop about important business happenings. It is all about transparency and making sure investors have the information they need. Let's talk numbers. NextTrip sold 333,334 shares of their common stock. On top of that, they issued warrants that allow the buyer to purchase another 166,667 shares. For all of this, they pocketed a cool $1 million. That is a significant chunk of change for a company. This type of sale is often done to raise capital quickly, and those warrants, they give the buyer the right to buy the stock at $3 a share, and they have 3 years to decide. This is pretty common in these types of deals. What is interesting here is that they can be exercised in two ways, either with cash or what is called a cashless exercise. A cashless exercise is neat because it means the buyer can use the value of the stock they're about to get to pay for it, essentially trading some of the value of the shares they receive for the shares themselves without needing to put up new cash. So what are they going to do with all this money? The report says it is going towards working capital and general corporate purposes. This usually means to cover day-to-day operations, pay bills, maybe invest in new projects, or just keep the business running smoothly. It is not always the most exciting use of funds, but it is essential for a company's survival and growth. Now, this is where it gets a bit technical, but it is crucial. These shares and warrants weren't registered with the Securities and Exchange Commission in the usual public way. They're considered restricted securities. This means they were sold under an exemption from registration, likely because they were private sales to a specific investor. In this case, Charcoal Investments Limited, this is a common way for companies, especially smaller ones, to raise money without going through the lengthy and expensive process of a public offering. The exemption they're relying on is under Section 4(2) of the Securities Act, which is designed for private transactions. This basically means they're saying this was a deal between sophisticated parties where full public disclosure wasn't necessary due to the nature of the transaction. The filing also lists the documents that go along with this report, including the actual warrant and the securities purchase agreement. These are the legal documents detailing the whole deal. Now, let's look at the bigger picture here. NextTrip has just brought in $1 million through a sale of stock and warrants. This type of financing is a common way for companies to get the capital they need, especially if they're not yet profitable or in a growth phase. On the one hand, raising money is a good sign that the company is actively managing its finances and looking to expand or sustain operations. However, it also signals that the company may not be generating enough cash from its core business activities to fund its operations. Selling shares dilutes the ownership of existing shareholders, meaning everyone's slice of the company pie gets a little smaller. The warrants introduce potential future dilution if they are exercised. The fact that they need to raise capital this way can sometimes indicate that the business isn't yet self-sustaining or profitable on its own. The key here is to understand where NextTrip's business is heading. Are they using this cash to invest in a growth opportunity that will pay off significantly, or is it just to keep the lights on? Without more information about their actual business operations and financial health beyond this single transaction, it is hard to say definitively, but this type of financing usually comes with its own set of challenges, including managing investor expectations and the pressure to perform. So to sum it up, NextTrip has secured a significant amount of cash through a private placement of stock and warrants. This is a crucial move for their financial runway. The story here is one of a company actively seeking funding to fuel its future. The big question for investors and anyone watching is whether this capital infusion will lead to substantial growth and profitability, or if it is simply a measure to patch financial gaps. We'll have to keep an eye on their future filings to see how this plays out. Alright, that is our breakdown of NextTrip's latest filing. What is your take on this type of financing and what it signals for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.